start off with the stock market as usual. Look at the gainers and losers as of yesterday, closing at the Nigerian Stock Exchange. Then over to the business segment, we talk about real estate and what businesses need to know about it. Then over to the sector segment where we talk about beauty product production. All of this after the break. We'll be right back. Stay with us. Thank you. Welcome back. It's the Profit Points show, and this is the stock market segment. I have in the studio Ambrose Omodion, investment analyst from InvestData. Good morning, Ambrose. Thanks for coming as usual.
Thanks for having me too.
I'm always happy to have you. Thanks for coming. All right, so let's begin with the gainers and losers. Top 5 gainers and losers as of yesterday. At the end of close of the markets on the Nigerian Stock Exchange, we have Sovereign Trust topping the gainers chart, full 10%. It closed at 22 kobo from 20 kobo. Then Veritas Assurance followed at 10% too. Academic Press 10%, and BOC Gas then Champions Brewery 9.92 and 9.8% respectively. So obviously, apart from BOC Gas, the remaining 4 are really penny stocks. Yes. So what do you have to say about it? We can't see any big name here. What's going on? Is it that
actually
already now?
Actually, as the market yesterday, the market was so volatile and missed for traders yesterday. In the morning, market is about 40,538 point something index before market came down in the afternoon when profit taking also hit the market. Okay. But the good thing is that there's a structure in the market that has changed now, and I believe those traders and investors should look at it and understand that structure that have changed the market. Before now, our market is being dominated by foreign investors. And whenever they call market fee their impact, and when there's any movement in Nigeria, that police anything, the way they move out, because they are here to make profit. They are not part and part of it. They also have to make profit out of our economy, our market, and go out. But now the domestic investors are taking more the high chunk of the market now. And who are those domestic investors? The institutional investors in the economy, especially the PFAs. And the PFAs, they are going for long-term investment. The source of their fund is for long-term. They manage pension fund and all those stuff. And they are not like they want to buy stock today and go away tomorrow. That means they enter good company that has fundamental that will give them a dividend that is above what is currently prevailing in money market, and the fixed income environment. For me, that is why I say that market has been a bit stable. Despite the activity is not too volatile as expected, but market has been stable, and that is how an economy should run. When you see a market that you can plan with, if we have such markets for a long time, and there will be a place that we can plan your investment, everything you want to put with market. But before, when the foreign investors will come overnight, they are going. But now we are seeing the PFS coming back to the equity market to position. For me, it's a good development. But the good thing is that if you look at the numbers of stocks that gain, that top the gainers, there are about 32 that gain yesterday, but the 5 stock gainers were penny stocks. And also as a result that trading pattern has changed equally, as I've said, because before now, toward the end of 2020, the high cap stock is the one that pushed the market up. If you really take the percentage of stock that gained last year, when the market recorded about 50.034 last year, it's those high cap stocks that push the market. They are the ones that rally, and they control about 70% of the market cap. And when they move, to change the market entirely. But now, because we are already in the dividend era, we're expecting those December year accounts to start rolling in out from February. Every investment now is on those medium and low cap stock that have good dividend yield. People are not positioned, because if you look at those high cap stock, their dividend is already small. Going to them, you are just only to manage your portfolio or stabilize your portfolio. You won't get mountains of dividend yield. But those penny stocks and those medium stocks, where people are positioning just because there's a high yield, they're going to have a yield of almost 8% and above. And you have to wait for money market for 1 year, expecting a 3.7 or 3.2. Getting just in less than 6 months, in less than 4 months, you are getting 8% in dividend yield. Most of them are looking that way. That's why I see there's a lot of fatigue. And now most companies on this thing also have started releasing their what we call close period, telling you that the board meeting is also planned for this board. Those that are close to the management, insider will not buy the stock. When you see that kind of information, tell you that dividends are around the corner, and people already let me go ahead with this one, because we're spending by before the end of February. Most of them have done their board meeting and approved the financial for 2020. Now, but then people start, for me, that is why the market is a bit stable and it's good for our market. And also, kudos to CBN policy that interest rate is not up for now, but we are looking towards the MPC meeting that's coming on the 20th or on the 21st, 23 this month, if there will be any adjustment. For me, the purpose of MPC, the low interest rate, is just not for the capital market, it's for the economy. And to know for that, we have a economy that is coming up from recession. Then I don't see CBN adjusting the interest rate coming in, because if they've not achieved their purpose of coming out of recession, that's why they put it down, so that we can come out of recession, activities to employ people, to reduce unemployment rate. If we have not achieved that, I think there's none of them I know. And that means the capital market might remain the way it is now, bullish and going up. And which is also good, it's a sign of also there is confidence to a level in the quoted companies. That is why you see PFAs that don't invest anyhow are now in some good companies that they have confidence in the market.
All right, thank you. Let's take a look at the losers charts. Top 5 losers were livestock, went down by 9.74% to close at 1.75 kobo. Then Chi PLC, then FTN Cocoa, Cotix, and International Breweries. Looking at this too, you see that they are basically penny stock. So
yes.
Penny stock topped gainers chart, and they're also topping losers chart.
Yeah.
So what kind of argument do we want to give?
No,
since the same penny stock.
I told you that the market structure has changed because the people trading pattern has changed too. We are looking at, but what we are seeing or what we saw in this livestock and FTN Cocoa is purely profit taking. This has told that FTN Cocoa moved from as low as 20 kobo to as high as 89 kobo. Coming down now, people are just taking profit and pulling back is another opportunity for those that want to take risk and take position in that kind of stock. Then stock like livestock, you remember I said like livestock was selling around 70 kobo, you know, but around the August last year, last September, when now the stock have gone as high as 99 kobo before it pulled back to close. For me, it's just pure profit taking, and also it has the chance also to still go further because this pullback will create the opportunity for people to enter again. When they move to 210 kobo, people will still take profit.
You sound so sure that it's going to 210.
No. In the 10 golden stock we give at the training for 2021. These are the 10 golden stock amount. And we said they're going to return more than 30% in less than 150 days. And less than 40 days is admitted, surpassed almost that 30%. Then what are you waiting for? There are more or less of them. About 4 of them are in that 10 golden stock have achieved their target in less than 150. We forecasted that between now and end of April, between December and April. It's a stock that was still going to go because this stock for 2019 was in red, but crossed over to profitability in 2020. And you can see that from quarter to quarter it has been an uptrend. And knowing that the government policy is also favoring that sector, the possibility that they're going to pay dividend is high. That is why people are taking position. And also the shareholding structure of livestock is tight because it's not like other stock that when people are selling it to go down. If you are bulk of the stock is in UACN, being the major holder, about 75% holding structure stake down in that kind of company. For me, it's a place that one can look at. If you are thinking long, if you are thinking long, I call it growth stock. If you are thinking long, you can look the way of livestock. But you can see livestock, FTCO, this is a sector that I know that there's good for insurance. It's not purely taking. While equity is also profit taking. International Brewery, we know that their numbers are not too good, but because there's oscillation up and down, when it goes up, people make 10%, 20%, they come down, they buy again. And when you still talk oscillating, that it creates opportunity for traders.
Traders, yeah. Let's put that in mind. Traders, not long-term investors.
Traders,
you just want to buy
because the number is not too good for you to expect the dividend, but you can take risk of movement up and down. But for dividend, look away from it because they are still in red and they expect a company that gives what they don't have.
That's true. Okay, thank you very much, Ambrose. So let's take a preview per sector. So today we are going to talk about the health sector. I want to preview activity for 2021, what we should expect from them. Personally, I don't see anything. Let me not say I don't see any. I don't see a decline.
You don't see a change from
positivity.
Yeah,
I don't see it.
I like that.
The policy is still favoring them. Yeah. We are still very.
Another second will be recognized.
God forbid, but we are still very. Please don't do that. Don't do that again. You are making me remember all those house arrests. Please don't.
House arrest? No, this time don't arrest because there is a passing.
Thank God that people are scared to take. Okay, so. That's there and government is still supporting them. So I don't see that sector declining. That doesn't mean it's probably some of them won't lose price. I mean, lose value in their prices. Which we was later. It's not like they'll keep on going up for 365 days. But I don't see that sector suffering,
posting a negative
result in real life, as in the real activity of the sectors I don't see them performing badly or being flogged by the market. Talk of Fixing, May & Baker, GSK, you know, basically there are not that many, but those are the ones that just come to mind. But what do you have to tell us from an analyst's point of view?
Well, for me, as you just said, there is a lot of potential in that sector. And also, we're not rejoicing over COVID in Nigeria, but I'll tell you, COVID has made government to give attention to that sector, which is assisting them now. If government have devoted such time, they are having or fund to that sector before now, it will be one of the best sector investors will be looking at. But all these years, the sector has been struggling on its own because one, they're having cheap drugs coming to Nigeria and all this stuff, and people want to go for it. But now, because government want to reduce this health tourism, they go abroad, they're trying to make sure that our health sector is in order. And they can't do activities in terms of pharmaceutical activities, buying drugs without using the quoted companies. And these are the ones known. For example, now, you know, May & Baker has already entered agreement with federal government as going to vaccine before this period. And now government is also trying to import vaccine for COVID-19. You can't import vaccine through a chemist. You must go to this pharmaceutical company and also that will also boost their business. Now they also see kind of the cost of operation there is low because they are having a single-digit interest from government. And activities has increased because of the COVID-19, I've just said. For me, I see that sector has potential to sustain whatever they've done in 2020. And what you want to look at now, as an investor, look at companies that are ready to grow to grow their sales. That sales will also impact on their earnings. Earnings will also move towards what they pay you at the end of the year. And if you look at what happened in NIMET doesn't release their results because it has September as year end. They didn't pay dividend in 2019, but they paid dividend in 2020. Yeah, and they tell you that if you look at the number of orders, they are all uptrend, especially their sales and their profit after tax is up. That means we're likely to expect an improved dividend from that sector. For me, if you are not in that sector as an investor, you fuse one or two of those companies into your portfolio because when the company is performing well, the price will be to remain stable. And when they surpass market expectation, you see that the way market react to it, just like the way market reacted to Vitafoam result. When it came to the market, people were forecasting around 60 kobo dividend, 50 kobo dividend, because they paid 42 kobo the previous year, but they paid 70 kobo. Despite the COVID-19 issue, despite the economy was down in 2020, but they were able to pay 70 kobo against 42. That moved the price up. And if all these healthcare companies, like May & Baker, Fixing, GSK, and the other one is Pharmadeco. Pharmadeco is still in red. That's why no matter how
What's happening there? I know that they were also into drinks.
Yeah, the Pharmadeco is still in red. Their numbers are still in red as we speak now. But for those I've mentioned, May & Baker, Fixing, GSK, and NIMET, their numbers have been in uptrend. It tells you that something is happening in that company, in those companies. For me, investors should not panic. There is a lot of potential, and the price of them will be sustained going into the new year. And the good thing is that once we start seeing their first quarter, we'll give you an insight what you're going to see in 2021. Knowing that government is also making more budget to bring vaccine down to, and also the governor forum have said, let's look inward and manufacture our own COVID-19 vaccine here. That will also be another source for all these manufacturing companies in Nigeria. For me, there's a lot of business for them, and I expect that their revenue or their sales should look up. If we're looking at what to manufacture the vaccine, for me, it's kudos to our government if they can give them the fund to do that, because most of them manufacture drugs here in Nigeria. Then why are we taking more important for now, because you just take few, then produce here, and that will also put activities or empower that sector, even employ more people in that sector. That is the way we should go.
Well, I don't. It's a good development to hear that government wants them to manufacture, but we know that we Nigerians, we have this made in Nigeria mentality syndrome. I mean, common clothes, shoes, we believe made in Nigeria cannot be okay. Now talk of drugs. We don't even believe in ourselves. I don't know. I'm not saying that what government is saying is bad, but even if you look at medical, traveling out, who does that more? I mean, not you and I.
But now, they're looking at what?
Are they going to patronize?
Yes.
Are we going to see them patronize, or is just a case of let's just say it for the sake of acting responsibly? Because that's a question you need to ask.
But if before now, we still have lines of product for Fixing, one of their, all these blood tonic.
And you think government is taking?
No. The consumers know. May & Baker has the array of product line. GSK is more of, for me, if they are rolling out drugs, people will still patronize them, because if you go to most of the hospitals, these are the companies that
I don't have issues with people like us patronize. I'm just saying that the government that is giving funds should also show that you are patronizing them.
I agree with you.
Okay. Now,
on that note, for me, investors should not just panic for this year. This year, let the potential, but let policy of government guide you. Like what we saw in 2020 was a lot of policy change. And if that policy change, follow your progress in the economy. Don't just because you invested, go and sleep. Before people invest and go to their bed and sleep. Now, invest and watch the market because policy change can rubbish your investment. For that, know and understand what is the policy implication of the policy you are seeing, or where are they going, what will they impact. Like when there was a little hike in fuel pump price, people were complaining. But smart investors know that, yes, and this is going to impact their bottom line going forward. And I can see that since the beginning of the year, that sector is changing because not that because of the going to pay dividend. We know that in 2021 we expect an improvement in their financials at the end of the year. This has to use policy to take decision. Not that until people are complaining. As people are complaining, you as a smart man, look at where can I put my money that will give me more money. That is investing.
Okay. On a final note, we know that when a sector is performing sectorally, on the average, it might be going up. That doesn't mean all the stocks there are performing. So we don't want to show about somebody, an investor, we just pick up price list and just mark out all stocks in the health sector. So if you were to choose like your top 5 or top 4 companies in the health sector, which ones will you choose?
Personally, I'll choose Emi and Baker first. Then I'll choose the GSK, Fixin, then Nimet. Why, as we speak now, for Madeco, it's still in red. They don't look that way at all. We are in the market to make, not just to say I have shares. No, we are in the market to make money. Not just say I have this social, I have numbers of shares. No, which one is giving you more? That is most important. And then this was I mentioned, you are back to make good money if you position early, because I tell you that the man that enters stock at 2 naira and the one that enters at 5 naira, they can't make the same return. No, I mean you need to be time your position and enter at the right time and at the right price, so that at the end of the day you smile to your bank.
All right, thank you very much, Ambrose.
Yeah, thank you.
Thanks for coming on board. All right, this video is to the end of the stock market segment of the show. We're going to break and we're going to return. We consider real estate and what businesses should not regarding real estate investments. Stay with us. We'll be right back. Thank you.